Hello and happy summer, everybody. I'm
doing it now.
Mike Hill, Casey Harding. We are here. We are Money Matters right here in Midlothian. So I guess we could say Money Matters in Midlothian. Man, and I
Don't
actually
say it too fast.
Yeah, I actually got that out without stuttering there. We are Hill Financial Group. We are on podcast number, we're in the 70s now. So got a bunch of these and we're coming up with more and more ideas. We thank you for all the listeners and people that have viewed for their comments and actually some of their questions. That has actually spurned us some good podcast information that we're going to do. And actually this podcast came because I think we fielded about, 40 calls, several. Just a couple of calls on this subject. So we thought it would be a good podcast subject and kind of topical. By the time this comes out, it'll be at least about a month old since SpaceX went to market and brought out their IPO. But the topic for this week is IPOs. Are they a good or bad investment? So we can't give particular investment advice because everybody's situation.
You're not recommending you buy.
You're not recommending yes or no. Everybody's investment, criteria
Decision
is absolutely different. But we got so many calls on the SpaceX IPO. Mike, should I buy it? What do you think? What's your opinion, Casey?
Yep.
I know had the same. We had a bunch of calls. So we kind of want to just talk about what is an IPO? Why is it even necessary? And what's the purpose? Why do companies even go public, for lack of a better word? So if you can kind of describe what an IPO is and where a company's private and then all of a sudden they become public, why do they even do it to begin with? What is an IPO?
For sure. So IPO stands for Initial Public Offering. And it's essentially a company that has been, operating and functioning in the, private sector, basically, and raising capital through private investment and on and on and on. But they now are to a place where they want to open up their company to be public so that the normal everyday retail investor can buy stock into.
Buy stock can also give the company a lot of cash.
Correct.
Just by selling shares, they get to raise a lot of cash.
A huge influx in capital coming into the business that they can then go and invest to expand their market share and continue to invest and grow their company. So, that's the purpose of it. But, well-known ones from the past would be Facebook, Uber, Airbnb. We're just going to be talking about some ones that, like SpaceX, that went public about a month ago. There's a few others that are coming. And we're going to get into those.
And that's funny that you mentioned Facebook. I told a lot of clients this, the space antenna, it's completely different companies and all the things. I do like now Meta. I do like their business model when they right down to it. I mean, we even put these videos on Facebook. We provide the content and the information that Facebook sells. We basically work for them for free. And all they do is they sell our information. Based on criteria, based on demographics, the only inventory is data centers because all they got to do is save the videos and save it, but they don't supply any of it. They don't come up with any content whatsoever. So it's a genius business model. In my opinion, it's one of the best business models ever created.
Yeah.
But even when it came out, I remember this specifically, it came out at $40 a share. And you may think that's not a lot, but they had a bunch of shares. They have a lot of people that were involved in the company.
Right.
If you've ever seen the movie, you got that.
Yeah.
That they had to pay and they offered them shares. So they just had so many millions and millions and millions of shares. So $40 a share sounds low, but if you saw how many shares they had, it was a huge IPO. And I remember when that came out, it came out at 40, shot up to 60. And then within a month, it was at $20 a share. Now, since then, it has blown up and gone way up to the $500 range or whatever it is. But that's kind of how I compared, not to pick on SpaceX. I love not going to give too much information, but I love their business model. I think there's some things that they're going to be able to accomplish. Yeah. Just when they got to the point that SpaceX had a higher valuation than Amazon, we're talking a mature company.
Yeah.
With proven sales, with proven inventory, with proven growth, by the way. Every year they've grown.
Yeah.
I mean, just go to anybody's doorstep. Within a week, you'll see an Amazon box. I mean, that is complete market domination.
For sure.
And SpaceX, yes, they're the only one technically, and Amazon's actually trying to do their own rockets now. So,
Yeah.
but SpaceX is the only one that really does that industry. But you kind of have to look at, is the value there? So that's what I kind of tend to tell people when it comes to IPOs. Why investors like IPOs is you're getting in at a price at the beginning.
Yeah.
And so if it grows, you got in at the beginning. So, you know, if it grows, you can get that growth accumulation hypothetically. Sometimes IPOs come out and they don't grow.
Yeah.
WeWorks is a good example. They came out as an IPO. They even made a movie about it. Went up to 500 billion worth at stock price,
Mhm.
and they're bankrupt
Right.
3 years later. So, I mean, it doesn't always work out, but it's an opportunity to really invest in innovative companies. You got to remember why companies are going public. Most companies don't want to go public.
Yeah.
Why would I want to go public? I'm private. I'm Elon Musk. I can make every decision. Nobody can question me. I could do what I want, et cetera, et cetera.
My books are private.
But my books are private. I don't have to disclose anything. Then I go public. Everything is public. I have to make my books public. I can be voted off as the CEO now based on people voting,
Right.
because when you buy shares, you get a right to vote on any kind of important issues with the company.
Right.
There's increased public visibility. You have to disclose basically everything after you go public, what's your earnings, what's your losses, what's your new projects.
Order right now, you're supposed to have to do it again.
And then you have all the conference calls that you got to do. So but I mean, so you got to be careful. You got to remember the means why companies why are they going public? I would tell you 90% of the time, it's to raise capital. And also, it's also for people that have been with the company for a long time to finally get paid. And who are they getting paid from? Typically, the shares that were bought by you, the investor. So I'm not saying it's a bad investment, but just don't always focus on, the hype, SpaceX, you know, it's going to be the United States of SpaceX, you know, I mean, anyway, so the man became a trillionaire based on the shares of SpaceX. So again, I'm not sitting here saying good investment, bad investment. But what I'm saying is just know what you're buying and don't buy it on hype. You want to buy a really nice, fast thing and all the things that make you scared, then maybe you should go out and buy a Corvette. I don't know. So what are some of the risks to buying an IPO?
Yeah. So, I mean, just the price volatility, first couple of days we're, going like gangbusters. And then we've seen over the last week, it's dropped.
Kind of like the 205 with SpaceX.
Something like that. Yeah. But now we're back in the 150 range, I think. And maybe today, I'm not sure what it's at, but yeah. So, I mean, it can go up and down very quickly.
Yeah.
Like you said with Facebook, we popped to 60, went down to 20 after, in a 2-month time frame. So, those are things that can happen. But now we look at where Facebook is, and if you just buy and hold, you might end up being, right in at the ground floor. So it's just things like that, there's a limited public, financial history because they were private and now they're going public. So we don't have all the previous books.
You don't know if the expectations are real or not.
So there's just lots of uncertainty going into an IPO, whereas proven track record and businesses that have, reporting history, we can look at and see.
So a question I got is, Michael, should we wait or should we buy on day one?
Yeah.
Okay. And everybody wants to buy on day one. I can't tell you how many calls I had. I mean, it was,
of course. Yeah.
I got a bunch of calls. And as an advisor, yes, but we're still talking about, let's say you have $500,000 or $1 million portfolio. Okay. And I had clients calling. Even if I thought, yes, you should buy it, no matter what, you need to get on this. Maybe 1% of your portfolio should be in one stock, maybe 2. So when you get to at the end of the day, the market could go up 1%. We're talking literally a rounding error that's inside your portfolio, but everybody focuses on that $10,000 worth of SpaceX that I own, even though my portfolio is worth $1 million. It's just fun to talk about.
Do you want the story? I mean, at the ground floor, or do you want the wealth, long-term wealth that could be
And I think the marketing machine behind the IPO and the anticipation, announcing them on the news media, and I'm not just picking on SpaceX. There's a bunch of them out there that have done the same thing. Of course they do. They're going to try to get as much money as possible per share because the insiders that are taking it public probably have the majority of shares. I think I read where Elon Musk is almost 50% owner of shares of SpaceX. That's why he got worth over $1 trillion with that. So that's some of the risk. But honestly, and should you buy on day one?
Yeah. I mean, waiting can allow the market to settle and provide, more information before making that investment decision. Every investment, should fit your overall financial plan, like you were.
So, I mean, make sure it's something that if you lose the money, it doesn't change your lifestyle. But, if it doubles in 6 months, hey, now you got a story of your Christmas party that again, 1-2%, if it's me, of your total net worth is max that I would do on any IPO whatsoever. Waiting, like you said, waiting to allow the market to adjust. I think that's what you're seeing with SpaceX. The hype kind of sell. And now it's coming down. And I'm picking on them. There's other IPOs that are coming out. Okay, let's talk about that. This year, we have a bunch of big IPOs coming out. So this is kind of a warning video too.
Yeah.
You had SpaceX, and Casey was nice enough to print off the list of the IPOs coming out this year. OpenAI and Anthropic, which I love their business model. I've loved a lot of things they've done in the AI space. And OpenAI is I think, going to be right up there with them. But again, their valuations are coming in at close to $1 trillion themselves. Do I know if it's worked that or not? No, I haven't done that. I haven't gone through their books with, CPAs and accountants looking over their earnings. But what I would tell clients is, how does this fit in your retirement plan?
Right.
In my opinion, IPOs can tend to be riskier than buying a stock that's already known.
For sure.
So what's the rush? The rush is they have to sell you on the hype. Yes. Just my opinion.
No,
because they got to make their money. They're ready to cash out. Now, remember, a lot of companies put in restrictions to where, insiders can't sell shares for 6 months to a year. That might be something to check on. How long is the wait for insiders? If there is no restriction, price may go down pretty quick. So those are some things to think about. What are some questions? If I'm an investor, I want to buy OpenAI when it comes out. What are questions they should ask you?
I mean, do you understand how this company makes money? What are the revenue drivers?
What does OpenAI even stand for?
And is the valuation reasonable? So like if it's going to IPO at $852 billion, like they're projecting OpenAI or Anthropic at 965.
That's such a better straightforward.
Yeah.
I mean, that's the thing, to your point. Like we talk about Facebook. Facebook really at that time had no competitors. Instagram came out after Facebook. And then they acquired it.
Right.
But there was no competition. So you sit there and say, what is the valuation? We don't know. I think that's kind of the thing.
So it's on these AI companies like OpenAI and Anthropic, like they are each other's competition. So, there aren't a whole lot of other AI companies that are public yet at this point. So we just don't know what the market's going to bring. The bigger percent of those. So those are just kind of the questions. Like you mentioned, the last thing is, am I investing in the hype? Or now that I research. 9 times out of 10, it's hype. And I get it. It's on every TV channel. They're talking about it on The View, for Pete's sake. I mean, it's on stations that, aren't even everyone is talking about these big three.
And you don't want to miss out. I'm going to miss out. But again, we have talked about this on so many podcasts. A reason to invest should not be FOMO. It shouldn't be fear of missing out. That's no reason to ever, oh my gosh, I got to get in on gold. It's up to $5,000 now. Now I got to buy something. And now it's up to $4,000. I mean, FOMO is hope and FOMO are never reasons to invest, but hype for one. One thing I would like to say, kind of in closing, in Casey, when you took a call from clients that were asking about SpaceX, if you could what was kind of your advice when those calls came in? I'm not talking about a particular case in general. What was your advice?
I mean, it honestly was a lot of what we just said, in the last, 15 minutes of just like, hey, these can get hyped up and go up really quickly. But it also could, go.
Did you let the clients make the decision, or were you like, no, we're not buying this right now? Or
no, I completely put it on for, the client. I was like, like I said, we are not going to, like, we can't place that trade for you. But if you want to go open up your own account and just, put your own money in that, outside of what we're doing for you, feel free to do that. But it's just, it's not something that we are going to, take on, open up just a single account for this one position.
I think you said it best. I think it's, does this fit your retirement plan?
Yeah.
If it doesn't so much fit your retirement plan, but this is something you just want to get in on,
Right.
that's two completely different conversations.
Sure.
Just be aware of that, Mr.
Yeah.
Yeah. So when you call me on OpenAI and Anthropic,
Yeah.
I'm going to send you a copy of this podcast, and hopefully, I'm not going to say no, but I'm going to be like, I'm going to give you the reasons for it. I'm going to give you the reasons against it. But in closing, IPOs aren't really automatically a good investment or a bad investment. They're just simply an investment option. It's something different. It's good to be excited about the market. You also got to remember the New York Stock Exchange and the NASDAQ over the last 20 years have restricted and actually kicked stocks out because filing fees and everything else are so expensive right now to just be listed. We've gone, I think I read somewhere where we've gone from 12,000 stocks on the stock market down to almost 7 just in the last 20 years. So there's less stocks to choose from. So when a new one comes out, that's more exciting, but just make sure you're not basically giving money away to somebody to cash out.
Yeah.
Do you have any closing thoughts?
No, I think that really, it's really making sure that, the investments that you're making are, fit into your goals and part of a diversified portfolio, and that you have a long-term strategy in mind and not just based on emotion.
Well, that was a quick little podcast on IPOs, good or bad investment. This is Money Matters. Please like, share, comment. Please keep giving us comment. The reason we did this is because we have client calls coming in. I hope it was a good, informative. We do this podcast. We say it all the time because we want to give you information that is not just Google or ChatGPT or whatever, but something that basically helps you in your investment process. This is Money Matters with Mike Hill. And
Thanks, Marty.
we are Hill Financial Group right here in Midlothian, Texas, or Ellis County. The best financial firm in Ellis County. We're working on Texas right now. So thank you for watching. Thank you again for listening. Take care. God bless.